Hi everyone, welcome back to Go Local Live. I'm Go Local News Editor Kate Nagel. Thanks for tuning in this Tuesday afternoon. I'd like to welcome a last-minute fill-in guest. I appreciate your taking the time to break down what's happening with the stock market. Of course, Jon Kuczmarski with Efficient Capital Strategies. Thank you for coming back.
Thank you for having me, Kate.
Well, I appreciate your coming and to talk about the latest. I believe you joined us last here in March. Clearly, a lot's happened since then, and let's talk about the bond market and the yield curve inversion.
Yes, let's talk about the bond market. First off, let me start off. I want to congratulate Barrington on their appearance in the Little League World Series and wish them best of luck tonight.
Good luck.
At 7:30 on ESPN. You made us very proud, and we're happy for you. First off, I want to give a disclaimer. This is not investment advice. If you hear something that you find actionable or think it's a good investment idea, please consult with a financial professional. I'm here to recap what's happened in the past, not make recommendations or predictions for the future. Not all investment advice is not one size fits all. Investment advisors see if investments are suitable for you. There are plenty of them in the state, and they're all ready to talk to you.
With that?
Sorry, and to get that out of the way, and the third point is yes, what's been going on in the fixed income market over the last 6 months has really been the story. Stocks, and investors have kind of seen it in their stock portfolios in the last 3 weeks. August has been a very significant month for U.S. bonds, U.S. credit, fixed income, and stocks have kind of been the second derivative. They've been kind of reacting what's happening on the fixed income market. Fixed income volatility is measured by the Merrill Lynch 30-day move index. It hit the highest level on August 16th that it has hit since the early 2016. So, significant things are happening in the bond market. A lot of people are trying to read into that and see what that means.
Well, we did hear from Janet Yellen on this, and I know that you brought that out to give us a little insight as to what she thought on that as well.
Absolutely. All right, first off, let me define what an inverted yield curve is. An inverted yield curve historically, but not always, has predated some of the last recessions over the last 40 years. And by an inverted yield curve, I mean the yield of the 10-year U.S. Treasury is below the yield of the 2-year U.S. Treasury. There are some parts of the yield curve that have been inverted since March, but mainly the U.S. investor community is worried about the 210 spread, as we like to call it, and that's about flat. It's about 4.5 basis points when I left the office. So now everyone's saying, what does the inverted yield curve means for investors? And that I'm going to just, as Kate alluded to, I'm going to mention what two former chairs of the Fed had to say about this issue in the last week, and we'll use their perspective. Janet Yellen said, historically, it's been a pretty good signal of recession, but I think that's when markets pay attention to it. But I would really urge on this occasion, it may be a less good signal. The reason for that is that there are a number of factors other than market expectations about the future path of interest rates that are pushing down long-term yields.
So let's talk a little bit about those other factors.
Hold up, I'll get to that, hold up. And then we'll go to the other chairman. Alan Greenspan said, there's an international arbitrage going on in the bond market that's helping driving treasury yields lower. He said this last Tuesday.
Yep.
And now what that means is that the 10-year bond in Germany is now yielding negative 70 basis points. When I was here in May, it was 25 basis points. In the United States now, when I was here in May, was at 230 on the 10-year. Now, today's low was about 150.
Okay.
Last Thursday, we were at 147. So as you can see, rates are going lower generally around the world. I think the structural factors that Alan Greenspan, Chair Greenspan, and Chair Yellen are discussing is kind of what's happening overseas is kind of impacting our bond market. And now, historically, it's been a very good predictor of recession. The yield curve would invert, and historically, 9 months later, the economy would be in recession. I think in this case, you just have to look under the hood a little bit, see what's going on. But also, let me allude to Chair Yellen's final comment. Is I think the answer when Chair Yellen was asked is this, is the U.S. headed into a recession? Chair Yellen said, I think the answer is most likely no. I think the U.S. economy has enough strength to avoid that. But odds have clearly risen, and they're higher than I'm frankly comfortable with.
Okay.
So as you can see, and another piece of research, sorry to be throwing as much research at you as possible today. This actually came out about 90 minutes ago, so it's kind of hot. But the desk at J.P. Morgan said, the sharp swoon in U.S. Treasury yields this month may not be pointing to a looming economic slowdown after all. Less than half of the bond market's rally in August can be explained by a deterioration in the economic growth outlook. So that's historically why bonds will rally when they head into a recession. But he said, expectations for further easing from the Federal Reserve and the rest of the bond market move was driven by non-economic factors that nonetheless have spurred demand for long-term government debt. So there are some structural factors at play. There's the overseas negative rates that are providing, investors in Europe to take their money from out of Europe and bring it into something that has a positive yield. But look, I would be very, it's a significant signal. Investors, it's pretty much all investors have been talking about for the last week.
Well, that's why I so appreciate you again being able to scoot over here at the last minute. And let's talk a little bit about what's taking place this weekend. The Fed, the Fed and Jackson Hole. What are we looking to see about that?
Jackson Hole has become a pretty interesting event for for central bankers. It's held by the Kansas City Federal Reserve Bank, and they do an annual symposium in Jackson Hole. Central bankers get their best cowboy hats and boots, and they get out there. So we're going to hear from the Fed this weekend. And, and I think really what's happened, and, investors, we had a rate hike, a rate cut last month. And it's because I believe the Fed, what the Fed has this term called neutral rate.
Okay.
And the neutral rate to the Fed is the interest rate where they're no longer accommodative or no longer restrictive. So they think it's like the end zone for raising rates. When we started raising rates in 2015, the end zone was like 3%. Somewhere around 2018, it went down to 2.5%. And I think the end zone now, considering it for the Fed, the neutral rate is like 2%.
Okay.
So that's why we had the first of two rate cuts. Now we're down to 2.25. I think they're pretty much telegraphing another one in the fall, I guess down to 2. I mean, this is what the Fed's fund markets. This is not me, forecasting it. But I think it's not because they're trying to be accommodative. They're just trying to realize that, like, where rates are overseas, the neutral rate has to be lower.
Well, I appreciate your taking the time again to give a little contextualization which is happening in the market, especially in the bond market. And hopefully we'll have the opportunity to talk with you soon. But again, as you said, all that anyone's talking about, the yield curve inversion, what it means and what it doesn't mean. So I think you broke it down for viewers, and I very much appreciate your taking the time to come in.
And thanks for having me. And look, we're going to wait and see. We're going to see what happens. There's other factors that we're going to watch, but it's an interesting one. And historically, it hasn't been a very positive sign for the markets. But listening to the Fed chairs and some other very smart people on Wall Street, this may just be a unique situation in 2019.
Well, as he said, we'll keep an eye on it. And as we said at the outset, good luck to the Barrington Little League team this evening, 7:30, ESPN. Catch them. And we'll have the coverage for you on GoLocalProv.com. So, Jon Kuczmarski, thank you.
Thank you, Kate.
And thank you for watching this afternoon here on Go Local Live. Of course, we'll be back for more tomorrow. But in the meantime, find us on GoLocalProv.com. Catch us on Facebook, and we'll see you tomorrow. I'm Go Local News Editor Kate Nagel.